Monday, July 20th, 2020, Maneco 64, home of alternative economics and contrarian views. We're going to look at the mining sector today. I think it's pointing to even more gains in bullion, in gold bullion and silver bullion. And I'm going to look at the stock market as well, the general stock market. There's some indicators that are pointing maybe to a top in the general stock market. Could that drag the miners down? Possibly. Not necessarily, though, I don't think. Because if gold continues to go up and silver and the miners keep leading the way like they look to be doing, I think we could see the general stock market top and the miners and gold continue higher. The fact that the euro looks pretty strong is a good signal, I would say, as well for gold. Even though gold already has made a new all-time high this year in euros, we're just waiting for the dollar all-time high, which isn't very far away. We're still kind of knocking on the door here of 1810, 1820 in gold. So before I look at the markets and some of the charts of the miners and the euro, just a couple of stories that I've seen here that are quite interesting. One is in the FT. It says bullish US options trading suggests caution thrown aside. Data show rising volumes of rights to buy stocks rather than sell. Well, that's the old put-call ratio. So there's a lot less buying of puts. The buying of calls have gone through the roof relative to puts. So that's what they're talking about here. This is a bearish signal usually when people are on one side of the boat. And in this particular case, on the bullish side, they're buying a lot of calls. Calls are, of course, you have the right to buy a stock at a certain price. The put option, of course, it gives you the right to sell. So you can see here that the put to call ratio is at the lowest level we've seen in over 2.5 years. Well, close to, I would say. Of course, I spoke recently about a series of videos, I think 2, maybe 3, about the crash we had earlier this year, comparing it to 1929, 1930, that era, and that I expected a rebound from the bottom in March this year of about 13 weeks. And it took about 12 weeks. And ever since then, the market has been coming off as well. Other one is in the Wall Street Journal. It says, a powerful force, Tesla's momentum leads stock market surge. Investors favor shares that have risen sharply in recent weeks, like the electric automaker and vaccine makers, worrying skeptics who think rally has gone too far. So you never know. I'm not saying Tesla is going to crash or the stock market, but these are just warning signs. FT and Wall Street Journal are usually not great at picking tops, so it could even be a reverse indicator. But nonetheless, I wanted to show you this as well. The number of Robinhood users holding Tesla, so you can see since March. And these people are mostly very young people who don't have any market experience. Look how many of them are holding these shares. I've seen the adverts on YouTube. Here in the UK, it's called Trading 212. And they're really pushing this kind of investing. It allows people to buy like £1 worth or $1 worth of shares, even though the shares are over $1,000. I personally think it's very dangerous. And we got also a number of Robinhood users holding Moderna. I think they're involved in the vaccine business. So those are the 2 articles I wanted to show you. Now let's go look at the markets. It's a little later today than usual. It's 9:32 a.m. So let's start looking at the prices, and then we'll look at some charts of the gold miners ETF, GDX and gdxj. They're the ones traded here in London. They're looking very good. They're the ones I have in my ISA, which is a tax-free account. It gives you the opportunity to put in a maximum of £20,000 every year, tax-free. What does that mean? Well, if I make big gains, I don't pay any capital gains tax. There's no tax. That's an ISA. Right now, spot gold is virtually unchanged at 1810, up slightly. The low's been 1805 and the high 1811. So we're still knocking on that resistance around 1815. I still think 1825 is a key level. If we can close the month above 1825, that would be very bullish. Silver is doing relatively well compared to gold, but no fireworks. But it's at 1940, up 8 cents. The high's been 1943 and the low 1923. I think it was on Friday they hammered silver down below 19, but it came straight back up. They're having a tough time keeping the metals down, I would say. The Dow future is down 168 points, or 2/3%. S&P is down 0.5%, and the Nasdaq 100 future is also down 0.5%. The euro firming up here. We are at 114.67. The euro is up 1/3%. Just wanted to show you this chart here of the euro. It's looking quite bullish versus the dollar. What could this mean? I think it means that the U.S. economy is probably going to weaken further. Yes, it's picked up after everything was shut down. It's normal that it has picked up. So have all other economies. But I think people have been betting too much on it. I think this crisis is far from over. Everything you see in the papers now is about this second wave, the masks. I think they're really playing up this thing. This is their agenda. And it's not going to help the economies. And there's talk now as well about a second stimulus, because the $600 stimulus is coming up for renewal. Well, if they're going to renew it, I think it phases out on the 26th of July. So that's very important, I would say, not only for the economy and the markets. A lot of the furlough schemes here in the UK as well are going to start to phase out from August. And not great. So I think that's why the euro is picking up a little bit. I think U.S. yields, treasury yields have lower to go, while the European yields are low enough. So I think that's what's giving the euro a little bit of strength here versus the dollar. So now let's look at these miners. I've got here the equivalent of the GDX. It's the VanEck Vectors Gold Miners ETF here in the UK. Just wanted to show you this chart. It's looking quite bullish, I would say. Yeah, it's been very volatile since the crisis started in March. You can see that it dumped together with all the general markets, picked up quite strongly, dropped again a little bit, but now it's going again, and it's broken through the recent high, looking very good in the short term. I'm thinking of holding this probably through the summer because historically the precious metal sector does well in the summer, leading up to around September, and then in October it historically the seasonal strength of the metals wanes. So we'll have to see. As I said, my holdings are up 30% with the gold miners GDX, gdxj, and also the Tanzanian royalty, which has come off the recent highs, but I still think it looks quite good. That might be more of a longer term holding. That's TRX. It's listed in Toronto and in New York, Tanzanian Royalty Exploration. So let's look at the junior miners, GDXJ equivalent. This is probably a different chart than the American one because this is traded in London. So yeah, this is doing really well. We've broken the high from the summer of 2016. That was when gold had that high that held up until last year at 1375. So we've confirmed the high now in the bullion with the junior miners here. You can see there, this chart is looking very, very bullish. Is it going to keep going straight up? No, it will be volatile, and you just got to sit tight and hold on to the position, or you can take some profit. I'm going to hold on for a while longer. So I think these ETFs, GDXJ, are pointing to a lot higher bullion prices. So there you go. Is this advice? Financial advice? No, this is just my opinion and what I'm doing. I suggest people do their own homework about investing. Yeah, one good book to read is the book about Jesse Livermore by Richard Smitten. I recommend that if you've never traded before you commit any money to trading and investing. I recommend you read that book. It's a really interesting book. There are other books as well. Benjamin Graham on value investing. Even though value investing nowadays is something of a difficult task, seeing that the central banks are intervening and manipulating the markets. But I think there's always opportunities. I don't think the central banks, even though there's talk that they're going to start buying stocks, particularly the Fed, I'm not sure they're going to be buying miners or gold ETFs, but they're still doing really well. And I think they're a forgotten sector. I think everyone's focused on Tesla, Moderna, and all the technology companies, and they've forgotten about the metals and why the metals are important when you have a credit bubble like we have. They're keeping this credit bubble going, and I don't think it's going to end soon. I think the next leg of this crisis is going to give politicians, not only in the US, but maybe even in the UK, another reason to stimulate fiscally and monetarily, and that should keep the metals in good stead going forward. So there you go. If you enjoyed this video, make sure you hit the like button. Think about subscribing to my channel. If you haven't yet, make sure you share this video far and wide as well. It helps. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.